we've heard a lot about what I'm going to talk about, but what I wanted to do is, as an investor, I'm actually looking 5 to 10 years out and thinking, what's the new technology across different sectors, or which are the sectors that are the most interesting for the future in terms of benefiting from innovation and technology. And when I put the fund together 2 years ago, and also being based in New York, I'm a former investment banker. I was the founder of a startup in the fintech space in 1997 in New York. I really thought that fintech or financial services is really ripe for innovation. And so these are the trends that I'm looking at and the movement I've seen in the last 2 years in the sector. So why right now? I mean, what is it about this sector that makes it ripe for disruption? We saw huge margin compression post-2008, and I'd say, in the U.S., and I'd argue it rippled through the rest of the world. 2008 is still being felt in terms of the new regulation that ensued after the crash and the too big to fail banks actually failing. It just made everyone worried about this sector that, and we talked about it earlier, that a bank you thought would signify trust, at least in markets like the U.S., and all of a sudden that was turned upside down, and people began to not trust banks, and banks were less likely to lend the way they were lending, which really started compressing their margins. So now they realize they need to look outside of their borders or their four walls to innovate, and they can't do it all internally. And so we're seeing a lot of banks get involved in investing in startups. We're seeing them start these innovation labs. I think every major bank around the world has started one. And I think that's all really good news for those of us who care about innovation in this sector. The second point is millennials. We hear it all the time. Millennials are a huge demographic all around the world. And I mean, a lot of the markets that are going to see the most growth are the youngest markets. So you look at Asia, Latin America, Africa, these populations are all under 35. And so there's going to be, and there is a sea change happening in terms of expectations from banks and financial services. And I would argue that we're never going to go back to the way things were, just because of this wave of youth who are digital natives and expect a different level of customer service and interaction in every sector, and including financial services. The third is very tied to that. It's just the digitization of everything. I mean, we saw it in the music sector. We've seen it in the media sector. A lot of these sectors were caught off guard. Finance can benefit from the experience of these other sectors that were very resistant to innovation, and I think have a better understanding of how they need to start acting and working with startups and smaller companies beyond their walls. And then the fourth point, which is very apparent to all of you, but it's the growth of the unbanked consumer in emerging markets. We have 2.5 billion unbanked people around the world, a lot more billions of underbanked, and I alluded to this before, even in the US, which we consider very well-banked, I would argue that this younger generation and an older generation are severely underbanked because of the risk aversion that banks have had post-2008. So this opens up an opportunity for newer players, whether they're banks or telecoms. We just talked about that. to begin offering services where the traditional banking industry have left gaps. So, as a VC, I follow the financings in the sector. And this chart is actually missing some big financings. I just saw that there was a marketplace lender in China called Lu that raised money last year at an $18.5 billion valuation, but they just announced it this past week. But what we're seeing is a lot of activity in the last year. We see a little dip in Q4. That's just because, well, there's some seasonality to Q4 financing, and we're also seeing just an overall slowdown in financing, but there's still significant amount of money being earmarked for this sector. And then this is looking at the activity going back to 2007, and the yellow is VC financing in the United States. And you can see, though, that APAC, Europe, other have also started attracting more capital. And I think what we're seeing is some of these business models in the US that are working are now being replicated in other regions and localized. And I think that other piece, or outside of the US piece, is going to continue to grow, and hopefully you guys will all be a part of that. So breaking down where the money has gone by kind of subsector in fintech, you can see payments has gotten the bulk of the capital. Personal finance management, which are these robo-advisors and tools to help people save more. It is the second largest category. Lending, I was surprised. I thought relatively more had gone into it, because we've certainly heard about a lot of the bigger financings, but that's still been a sector. And then Bitcoin is fourth, and I'd say that's going to continue to grow. I'm obviously very bullish on Bitcoin and blockchain, as you heard earlier. But I think this also shows that there's still a lot of kind of subsectors that will continue to grow in the future. So let's take apart some of these. Lending. I just read today that Lending Club announced their quarterly results, and they've now done over $16 billion of loans, and have really proven out that there is a market for creating marketplaces for lending. Part of it has been driven by lower interest rate environment in the developed markets, where there are hedge funds and institutions that want to make a bigger return on their capital than the 0 to 1% that currently exists, and so they have been going to these platforms to offer up capital for loans. This data is actually from the UK, because I wanted to diversify a little bit, and there you can see that the P2P business lending is the largest chunk, with consumer lending second. Lending Club, in their results today, said that there's still the majority of their loans are going to consumers, a lot of them who are refinancing credit card debt, or looking to buy something small. And that's where we see the range of $1,000 to $35,000 loans. But I also think what we're going to see is some more creative financing models emerge, including invoice trading, and we've seen more of a verticalization. Some companies focused on helping refinance student loan debt. So I would encourage all of you to think kind of creatively about what the needs are in your specific market, and how marketplace platform could address those. Payments. I'd say there's a lot of innovation still in payments if you think creatively about it. Certainly we have credit cards, we have PayPal, we have Western Union, but a lot of the innovation in the payments sector, beyond the big players, have been on the front end. So I'd say a lot of these remittance players make it easier, a better user interface to access services, and their fees may be slightly lower. I mean, it doesn't take much to get lower than Western Union that sometimes charges 12% plus in certain markets. But what we're going to start to see is more back-end innovation and true peer-to-peer kind of innovation in the payment side. I think the blockchain is going to be a big part of it, or blockchain-like technology, and that is, I'd say, an area to watch, even though lots of folks think that payments has been done already. Personal finance. So this data talks about how people in the US are using the digital mobile banking. And right now in the US, a lot of it is still focused on checking balances, checking payment history. Some folks are using it to deposit checks, and it all seems really simplistic compared to what's actually potentially possible. And we've seen companies like Wealthfront, which has cut fees of managing money, and so what they do is automate the portfolio, and so they cut down the fees to 0.5% versus 1% plus that wealth advisors may charge, and they've created what they say they're providing these wealth management services to a generation that otherwise can't afford them. And that's an area that is, seeing a lot of activity in. What's very interesting is Atom Bank and companies like that in the UK that are fully mobile banks, so there are no branches. So they've cut down all of this overhead that the traditional financial institutions have, and argue that they're going to offer, and they haven't launched yet, but they're going to offer the same level or better level of services in a user interface in the way that people are used to. Now, if they did have to apply for and they got a banking license, so that's still a regulatory hurdle that exists. And then Hello Digit, and there are many others like that do savings tracking. We're going to in one of the next few slides, I'm going to talk about this, or maybe the next slide, on data. And I think the key here is how all of these companies are gathering data on their consumers to then be able to offer new products and services. So what they're doing today is not necessarily what they're going to do in the future, and that's what's really exciting about a lot of these fintech startups, because once you have that consumer and you're gathering enough data and you've built that channel and that trust, even though there may be regulatory challenges or customer acquisition challenges, there's kind of a lot of potential down the road to be the bank of the future. There we go with the data. So the key here is data leads to personalization. And the survivors in this fintech space are going to be the ones that think about their data strategy from the get-go. We heard from Lendo earlier. So they were one of the first companies to think about using social networking data to assess credit risk. So all these places around the world that there are no credit scores for, but they're perfectly capable of paying back loans. They were really at the forefront of thinking about using the data that exists out in the world and then bringing it back to that customer profile and that identity piece that we're talking about. Policy Genius is New York-based. They offer comparison shopping for different types of insurance. But they're collecting a lot of data on what type of insurance I'm looking for, what car do I have, what year is it from, what other insurance plans could work. Does that mean that this person needs renter's insurance? And so it's this, I say, more sophisticated way of kind of offering, cross-selling, and the key here is getting to as real-time decision-making as possible. So, somebody does not have to go through a painful, 2-month process to have access to insurance or loans, and data is the key to short-circuiting that time frame. And the third point here is on Internet of Things, IoT. It's still very, very early days for the IoT, but I believe that it's going to transform the way we think about payments, because if you think about every interaction that, say, a car would have with my music player, that would have with my smartphone, with my personal robot at home, all of those are microtransactions. And if we start thinking about how can we kind of validate those, use that data to better service the person in the middle of all of those transactions, I think can be really powerful. And again, this is very, very early days. There's a lot of infrastructure that needs to happen before we get to ubiquitous Internet of Things. But I think thinking about payments is going to be a big piece of that, of where and how quickly we're going to be adopting a true connected world with connected devices and people. And then the graph is pointing towards Cisco does this great study every year predicting the growth of internet traffic. This is specifically on mobile data traffic. And I think it's also closely tied to the Internet of Things because these are going to be data pipes that these devices and people are going to be using to do these microtransactions. So as we get more smartphones online, as we get more devices, this is just the data is going to continue to grow, and we'll also need really good analytics. So that's the other piece that I see a lot of financial firms focused on. Goldman just a couple days ago announced that they led a Series C $20 million investment in a company called Zoom Data. And Zoom Data it integrates data that's in different silos and allows it to be gathered and analyzed in more of a real-time way. And that is very indicative of where a lot of these financial firms are thinking in terms of data. And I think whoever figures out how to sift and analyze that data as quickly and accurately as possible are going to be the winners in even the financial technology landscape. So the blockchain, we talked about this before. I'd say the key points of it, and then the reason it's so exciting, and I use banks as an example because we're talking about fintech, but you can replace banks with notaries, doctors and hospitals. You can basically take any industry that has intermediaries, multiple intermediaries, and layers, and think about how the blockchain can truly disintermediate those. And the key points are that there's ownership verification, time-stamped, it's instantaneous. Now that's something that there's been a lot of conversation about. A bunch of my portfolio companies and other really smart people are out there working on making the transactions as instantaneous as possible. I do believe we're going to get there. Right now, it's kind of like the early days of the internet where our data speeds were really slow, and we'd have to wait for a while for the information to get to us. That's what's happening with blockchain or Bitcoin transactions. But again, I think this problem will be solved. We've talked about security of the actual blockchain infrastructure. And then what's exciting is location agnostic. So we talked about sitting here and being able to send money to someone in Africa with all of these characteristics at very low fees, and that is truly revolutionary. Now, combining that with all the data that can be created from this global ledger, and I think about, again, owning all of this, right? Instead of giving up ownership of our information, our creative assets, our health records, our financial history, loyalty points. So all of this becomes currency that then we can trade freely in a global market. Now, it's going to take a while to get there, but that, to me, is the real promise of this. And I think if you told a lot of people back in 1995 that we'd be doing the things we are with the internet, both good and bad, I think there would have been a lot of question marks on whether that was going to happen, whether it was going to be possible, that we would actually have these mini computers in our pockets, that farmers in Africa would be able to transact in rural areas with Nairobi and build their businesses. Just think about the economic potential that the internet has opened up, and I think the blockchain is potentially that, on steroids, that there is going to be exponential potential, but we need a lot of smart people involved in thinking about all of these different applications. So in summary, these are the areas that I'm looking at where I think the next 5 to 10 years are going to be key in seeing where we go. The analytics, democratization, I talk about wealth management, but just in general, democratization of financial services, and from non-bank lending providers. And again, I think that will depend on regulatory environments. But when I talk to regulators, and I talk to a lot of them about blockchain because it's a big educational process, there's a real willingness to learn about it. The cynics can say it's because they're trying to figure out how they're going to overcome it and shut it down. But I think we've actually kind of moved beyond that point based on the conversations I'm having. And then thinking about down the road of this global marketplace and these peer-to-peer transactions. And there's a company, Venmo, that PayPal bought, New York-based, and they were one of the first to create peer-to-peer payments. They used a banking back end, but they, I'd say, they were a little early in the market, and most of their customers were these millennials coming of age, and that's the market right now. And I think we're going to see a lot more of those, and we're going to see bigger companies scale in that peer-to-peer market. So thanks for sticking around, and if there are any questions, I have about 5 minutes to take them.